Hi everyone, this is Carlo from Forex. Today is January 17th, 2010, and we're preparing ourselves for the forecast of January 18th, 2010. So let's just get right into it. Alrighty, so far so good. We've seen the market just behaving very nicely to one side now. And let me just recap what I see here and the reason that I believe we're going downside. First things first, we'll go to the 4-hour chart as usual. Alrighty, so let's just do that. And the first things you do, you're going to bring out your MACD. And what's going to happen with the MACD here? What do we want to see? A what? A clear cross to the downside. Alright, so I see the width of this guy is taking over. That was pretty nice. And that actually translates very nicely into the reason of the latest upward movement of the market. If you notice in this area over here, for the last 1, 2, 3, 4, 5 4-hour bar, is about for the last complete 24 hours, the market was hesitating to go upwards, and that translated into the reason it was making us having a difficult time going long the market, because it was just consolidating and preparing themselves to reverse. And that's exactly what happened on the last week. And although if you notice that what I'm saying is, take a look at this consolidation stage here and then another one in here, but still everything slightly bullish. So even though that we had a hard time going long the market, we were trading right on consolidating area, and that was the reason that I was just saving this for you as a surprise, that you guys being trained on trading on consolidating areas, on consolidating market, which you usually don't like to do so. But when we see a most probable scenario to the upside based on the 4-hour chart, and you can just go ahead and take your chances, and when we drop down, you see that we had opportunity a couple of times. Let me just drop down here to the 30 minutes so I can show you what I'm talking about. 30 minutes, there you go. And let me just show you what I'm saying here. If you notice, even though that we were consolidating over here, this was a consolidation stage. Alright, let me see, there you go. You'll notice that on the 4-hour chart, this is a huge consolidation, but we still got nice swings, and this are the ones that we were trying to capitalize. This is the beginning of the week. Is the next one. Here comes the next one. And but you know, they were giving us a very nasty hard time doing so. But if you notice, by following the 4-hour chart, MACD, when they decided to run, they run on this, you know, on those legs. All right, so okay, having said that, I just wanted to point out that to you. Now we have another point, and which is to the downside. One way, and let me just, and you know, now we're done with the MACD. We know we're going down, so we're gonna have that in here. It's going down. Now let me just show this. We got a pivot low here, pivot low here, pivot low here, and this huge spikes took this low, took this low, and also this was a very important one, and it was taken by this bar. All right, so we have a 3 pivot lows here of very, you know, very important. At least these two were important, and both of them were taken by the market price activity, meaning that we're probably getting into the new area. Now we know that the MACD it's going down. We know that they're being previous pivot lows being taken down. So let's continue on with this analysis to confirm that we're probably the most probable scenario is to the downside. Well, we got the pivot highs here, and this is the third one forming. This is definitely a trend, a downtrend trend line. So that's another way to confirm it. And all right, and perhaps now another way to confirm this is, if you notice, I'm going to make it easier for you to see. This is 1, this is 2, this is 3. And if you notice, the width of the third 1 hour third wave was big, right? So I can certainly say that this is wave 1, this was wave 2, got it? And this was wave 3 to the downside. Now this is the end of wave 4, that it could probably perhaps end around the synergy zone, and then we should be trying to get ourselves into the beginning of wave 5, which is the second largest second larger swing down on the Elliott wave pattern. Got it? So we got in 1, 2, 3, 4, 5. So we're beginning into the stage of wave 5. That's another way to confirm a very highly probable great opportunity trade to the downside. So I'm just trying to show all of you you know, what goes through my mind when I decided to take that idea. Now if I jump back down to the 1 hour chart, well, this could very well translate into, hold on, just there you go. This is like 1, this could potentially be wave 2, and we're on the 1 hour chart. Got it? This is Elliott wave stuff. Now on the 1 hour chart, we just saw that we're probably getting our hands in the beginning of wave 5. Got it? That's good. And you know that on the Elliott wave patterns, wave 3 and wave 5 are the ones that we want to be in. Got it? Okay, so on the Elliott wave pattern, if we want to be on Elliott wave 3 and Elliott wave 5, and we knew that on the 1 hour chart, based on the 1 hour chart, we've seen a beginning of a possible beginning formation of wave 5. Look what happened on the wave 4. I see on the wave 4, this is 1, 2 is actually completing right now, which means that we're beginning supposedly into what? On the 4 hour, the beginning stages of wave 3. Check, check. It means that based on the Elliott wave theory, we want to be in at the beginning of wave 3 and wave 5, and we have a double confirmation that in 1 hour the 5th wave down is confirming its formation, and on the 4 hour chart the 3rd one is confirming on its formation. Both of them obviously are the one that we want to be in, so that's a double confirmation that we're probably going to have a great rundown if we were able to jump into the downside. So to recap, we have that the 4 hour MACD, all right, just confirmed that we're going down, all right, and we just want to follow that. And number 2, incredible points of pivot resistance points has been taken down. That's great. That's a confirmation to the downside. All right. On the 1 hour chart, we are in the beginning stages of the one. Let me change colors here. 1, 2, 3. We're starting. The red one is the 1 hour, right? Is a 1 hour chart. The beginning of the wave, the 5th wave down, right? But on the 4 hour chart, this is the beginning of the 3rd wave down. So we have multiple confirmations that it's a very highly probable opportunity to go into the downside. Now, this is the whole thing that goes through my mind as quickly as I am showing you, just to confirm that this is the most probable area I want to get myself into. It's going to be to the downside on a sell mode, and the reason that after that reasoning and analysis, I just want to double check with all that stuff that I just showed you right there and there. All right, so let me just get into the forecast for today, which means, well, I want to go short between 62.63 and 62.99. Once again, the market just pulled back in, and it's already in the zone. Does that mean that should we get into the wagon? Well, you can certainly do so, which I don't recommend, but you can certainly get yourself into it. if you're willing to sustain all the way up to the 62.99, if the market just start hovering some of, sort of into the zone before going down. So the same rules applies. I don't break them. I wait until 1 a.m. Eastern Standard Time, and I want to see prices about between the 62.63 and 62.99. If they come back down, they might probably come back up and test it again, closing into the opening of the Frankfurt session. But this is the time that I want to get in. The reason is just I don't want to be involved into early movements and become become on a standby mode, as I say, as the market comes down, up, down, up, down, a complete movement, and the actual complete movement has not been started yet. Usually by this time, after all these years of testing and analyzing market and hundreds and thousands of charts, I noticed that by waiting until 1 a.m. Eastern Standard Time, it's the most probable, beginning stages of the actual positioning and the move that we're expecting by the opening then of the London market. So that's basically it. So could we miss the trade, meaning that the problem, like it happened before, the market enter early and then come back down, then just retreats a little bit, not until the zone by the 1 a.m. and they continue to the downside? Yeah, it could happen, but I want to be on the real movements. And unless you have enough capital or trading small, that you can certainly wait until the market opens and see how they behave. And once they drop into the zone, you can certainly short, because you're shorting right in the area of high probability turnaround points, and leave your stop what it is, and just write it down all the way through the 1 a.m. see what happens, control your risk. Same thing. It's just the same thing. As long as you're shorting the market inside the zone, you're clear to go. I got no problem. But just bear in mind, that doesn't mean that once it's in there that they're going to reach the first target. It means that if you're early into it, before 1 a.m., that's what I mean. Well, you can see some market coming out, coming up, some sort of market behavior like that before they decided to take off and go to the targets. All right, so that's it, folks. I just wanted to point out to you. Now I wanna offer you, since we're by this time almost 98% of the members has stayed with us for the next month. I appreciate it and congratulate you to do that. So by that stage, this is what I'm doing. I'm gonna keep opening up more secrets and stuff like that, just like I did today. Right now, in my analysis thoughts, I'm gonna show you another trick of the trade, and that is as follows. I'm gonna confirm high probable target being confirmed into be reached. All right, so what I mean by that is I'm sorry, what I mean by that is as follows. We're looking to go short between 62.63 and 62.99, and that will put us on, just to give you that idea, that's roughly about 36 pips of risk right there. And we expect the market to reach to 62.03, 61.60 and 60.93. Okay, now I want to confirm which of these three targets are going to be the most probable ones to reach. All right, and a way to do that is to try to find out, as I showed you here. Let's say you do a trend like so. Okay, all right, and you do another trend line like that, and let's assume that the market just break below this area. So you want to measure one area of it's 110 pips, and the possibility they break to that side it's 110, and the closest one to 110 is the 61.60. So this is the one that we're most probably reach. If that is true, well, the potential trade, assuming that you take the worst fill, just on top of the bottom of the breakout of the synergy zone, would mean that you're getting at least 101 pip profit in this trade. Okay, that's one way to confirm it. Now the next one is my trick, and I use a special indicator for it. I'm gonna show it to you. And that those indicators are pivot points analysis. You can get them. You know, there's many out there. There's not secret. You can certainly have some indicators, pivot points indicators into place. So if I plot the indicators, which I don't like to use them because there's too many things going on, you know, too much lines. So I use it like I'm explaining to you. I'm waiting for the market to reach either one of these three target prices, and I want to find out which one is the most probable to reach. And if you notice, the pivot points fall pretty close to the 6103 and somehow close to 6177 to the 6160 right here. So what I mean is that based on the pivot points, this guy is very highly probable to reach, and this other one also is the second one probable to reach. Now, since by measuring this triangle over here, I notice that this guy has one confirmation, and this pivot point is close to this one as a second confirmation. Now I know that, you know, I just want to find out which of the further target price are most probable to be reached, because I want to milk the most out of this trade. So I got two confirmations of highly potential move into the second target price, meaning that I can sustain. If the prices come down in here, I'm going to see some retracement going on once they reach this target, the first target over here. And I can try to manage my trade by just moving my stop to break even, or perhaps, I don't know, a couple of pips profit, and give enough space for the market to, you know, retrace back down and come back into try to target the second one. And that way I can probably sustain today and create a 100 plus pip trade today. And I do have a second confirmation that the 6160 might be highly targeted for today, and that's going to be my objective of today. So that completes here my complete analysis on confirming my blueprint. My blueprint says that I want to go short between 62, 63, 62.99, and I can sustain into 62.03 and eventually 61.60. Based that my objective for taking the most out of this trade would be to get out at the 61.60 and try to go short between the 62.60 and 62.99. The further they move, hopefully, into the zone, the better position we have, the more money we will get, because maybe we can get 20 or 30 pips more by shorting into a little bit deeper into the zone and getting out closer to the second target price. Alright, so I hope this be very enlightening for you. I'm going to keep adding and informing more stuff to you as we go on. It's obviously that most of this stuff has been left for my mentor program, but I just want to give out something to you that has committed yourself into my system and my services, and for that I need to congratulate you for doing so. And my gift to you for that kind of level of trust is you know, this type of gifts that I'm giving away for you guys. All right, so that's it for today. One last note is that I noticed that today's range of the synergy zone, it's in the 30s. My thought on this is that's quite narrow. I'll have to keep my eye close into that. The possibility for the market to reach almost close to the stop loss could potentially be high, and the reason being is because I've seen this happen before. I'm not saying it's going to happen, but it's something to take in consideration. Since it's only a 30 pip risk today, it's very low. you can think very closely that the market could potentially reach that, or go very close to that stop loss level, because every swing that these guys are taking are, you know, usually this type of movement whatsoever. Once again, this calculation has been done based on the last couple of market analysis. And for example, if I measure here, I got a 73 pullback, we got a 52 pullback, got it. And this run here was, let me just say, is a 96 pullback. And you know, this is another one of my secrets here. So if I take that in consideration, 90, 70, and 50 something, so we have somehow, let me just pull that out for you so I can show you those kind of tricks, because I think you deserve that. So we got 96, 57 roughly, 76, that's equal to, divided by 3, we got an average of 76 pullback. And we have here, this pullback is about 60, got it? And the average return on this kind of pullback is about 76. If you notice, I'm not using Fibonacci retracement or anything at all. I'm just using average market momentum move for me to dictate the possible pullback here, and then I compare that as a confirmation for my synergy zone. So this is another way of confirming. If you notice, guys and girls, I'm just confirming every single aspect of my analysis. I don't like to drop things into the air. Once I do my analysis, that's fine and dandy, but I need to confirm and double freaking confirm what I'm gonna be doing, because I don't want to be risking all my money into these trades. I want high probable trades, and this is somehow the way to do it. So the average pullback has been 76 or 73, something like that. So it means that so far this market has pulled back in around 61%, which is into the place, but the average turns into 70 something, right? So 76 falls that into the idea that they perhaps might probably come back and finally get into the area, the complete area, which falls into the subzone that I just marked in there of 62.76 and 62.90 something. All right, so everything's in place, everything falls into consideration, so I got nothing else to do like to sit back and wait and try to execute everything as planned. This is Carlos Diaz from ForesightFX.com, which I believe is one of the best forecast services into the market, or at least I assure you that I'm trying to make this one of the best forecast services into analysis. I hope you have learned a lot in this trade, in this forecast, I'm sorry, in video, and happy pip hunting. All right, so I'll get back to you. If you think this video was very helpful and you think it might be acceptable for the trading area, just please tell me if that's possible. If not, I'm gonna try to include a couple of things. I will not repeat many of the techniques that I show in this video, due to the fact that it was just a gift, and it's not fair for those who have paid for the mentoring program for me to give away a couple of things. But I think it deserves your respect and you know, your commitment for me to give back to you, well, your commitment and your hard-earned money into these services. All right, so this is Carlos Diaz. God bless, and I'll see you in the next trade.